Okay, stock markets go up and down. I think everybody understands that. When you're looking at something like the S&P 500 or the Dow Jones or the Russell, they'll generally go up and up and up, and then they'll come down and down and down, and go up and up and up, and they'll come down and down and down. And that's normal. That's the ebb and flow of a market because people are buying and people are selling. And then on top of that, there's also algorithms that are looking at stock market indicators and technical analysis and know exactly when to buy and when to sell as well, according to their algorithms. Sometimes they work, sometimes they don't, sometimes trigger certain things happen. In certain cases, there is things called limit down. So if there's a big financial hoopla going on, like something serious, what'll happen is that if a market is going to drop, generally speaking, it'll drop by a certain percentage. Say, for example, the S&P drops by 7% or something like that. What'll happen is the markets will close and reset, because what's happening is that it's dropping a lot simply because of the fact that a bunch of the limit orders or the stop losses have been triggered. And what that'll do is it'll trigger everyone to sell their orders. So that what that does is that it starts undervaluing stocks. Allegedly, a lot of these stocks out there on the markets were already overvalued in the first place, according to like their price earnings ratios. But a hyperwave is a theory that goes through 7 different types of phases. And in general speaking, markets go up and down with the buying and selling. But in other areas, what'll happen is it'll go up. Like, I'll give the 1929 crash. What'll happen is that the markets was kind of moving like this way. That's phase 1. Phase 2 is a slight angle. Phase 3 is another angle. Phase 4 is the hockey stick. And then phase 5 is a big giant crash that goes down. And that's what happened in 1929, a big stock market day crash. And what happened was everybody was selling. And then what happens is that it bottoms out because prices are now undervalued. And so all of a sudden, somebody stepped in, bought whatever, and the markets start going back up again. And so the markets go back up. But in a hyperwave situation, this is now phase 6. It'll go up, but it will never get back to the high of phase 4. And then it runs out of steam, and then it continues the final crash all the way back to the bottom. So that's what happened in 1929. That's also what happened in the dot-com bubble, and it's also what happened in the 2008 financial crisis. It went from straight, that's 1, slant, phase 2, higher slant, phase 3, higher slant, phase 4, down, bounce, that's 6, and then 7 was a crash. And then in 2008, what happened was it would have gone down even further, and it was looking like it was going to do a dead cat bounce, which was phase 6, and then drop again for a 7. But then it started printing money, and then printing more money, and then printing more money, and then the market just kept on going up. And so the overall arcing market is still heading up and up and up, even after a particular point of crash. But I'm going to talk about a couple of stocks that you may be familiar with. One is Boeing, and the other one is Air Canada. So both of those stocks, during this whole coronavirus issue, they were going up. Well, Boeing had problems in the first place because of some mechanical issues and some deaths that had happened. But both Air Canada and Boeing are gigantic companies. And like Boeing has like 1 million employees. So clearly they're going to bail out this company. But what happened was Boeing went this way. It went this way, phase 2, this way, phase 3, this way, phase 4. Then it started going down, and that was phase 5. And then it went all the way down to phase 5. And now, so it went from something like $400 Boeing, it dropped all the way down to like $100 and it's hovering there right now. That is phase 5. It might drop down even more a little bit. We're not too sure at this point. When it bounces up, it'll bounce up because the central banks around the world, the president's already come out and said, and I guess they've talked with Jerome Powell at the Federal Reserve, that they're going to print a bunch of money, trillions of dollars, and they're going to start bailing out these corporations, and they're going to start spreading all this money. So what that means is that the stock market will start rising again. So that is phase 6. Now, we have had a major issue. Now, what happens when a phase 5 goes to a phase 6 is that sometimes it corrects, goes back to like a phase 3 sort of a wave when it was kind of heading up, and then phase 3 is like this. A lot of times, a phase 5 crashes, bounces, hits phase 3, and then the markets keep on going up because they're printing money. That's what I think is going to happen, but that's not what I know is going to happen. But what can happen is that, especially with Boeing and Air Canada, it goes up, and then travel is an issue all of a sudden, and people aren't traveling anymore, or there's some restrictions or whatever. They print some money, they're getting their business up and going, things are running again, economies are working, and then all of a sudden it just runs out of steam because they've printed too much money, or the business itself has gone through a business cycle where it needs to also cycle through. If it crashes back down again, it's a bad crash, and that would be phase 7. So that's a hyperwave. Phase 1, phase 2, phase 3, phase 4, hockey stick. Phase 5 goes down, goes up is phase 6, and phase 7 is the final crash. So there's some really good people out there that, especially on Twitter and YouTube, that do really good hyperwave theory. It's a theory, but clearly the theory has worked out because we've seen it working in the past. It's a technical analysis issue, and my concern is that this theory is going to play out with Boeing and it's going to play out with Air Canada. But I do think that, I've seen this before. I think we've all seen this before. They're going to kick the can down the road as far as they can. So I'm pretty sure that they're going to continue printing money and going into other areas that don't necessarily have money to build up that infrastructure, because they want everybody on this sort of a digital platform, digital grid. You can't do that if you have people still living in Siberia or Africa, or areas or rural America where they don't have internet connectivity and all this sort of stuff. So I do think that I don't think that this is the big one. I think we're still going higher. Now that doesn't mean that what I said is true. It's just what I think. And as I've mentioned before on other videos, I'm smart enough to know that I'm stupid instead of stupid enough to think that I'm smart, which means that there is a possibility that I'm wrong and it does crash, or it does keep on going, and everything's fine, everything is awesome, nothing happened. But I do think math and logic kind of step in at a certain point where we can't go forward. We've been this way since we've been running on a debt-based currency system, and this has been going on since 1971. But even before that, we were already starting to kind of go into this quantitative easing, printing money. Remember, it says in the Bible, the borrower is servant to the lender. And all the way back and then, you can see from the beginnings that we started off with gold, and then with silver, then with bronze, then with iron. And you can kind of see the currency changing and the values of systems changing all the time, because of course, we've had 6,000 years of monetary history showing that fiat currencies don't work. Thousands of fiat currencies. Clearly, why would we think that this one's going to work either? Which means that we're going to have a currency reset. So I don't know when that's going to be or how that's going to be, but I think it's going to be soon. And so even before 1971, you had the Bretton Woods Agreement, which basically pegged $20 to an ounce of gold. Boy, I hope I got that right. I might have that wrong. But before that, or it was $35, but before that, Bretton Woods, it was $20. So you're starting to see the value of the dollar go down and down and down. And it was backed by gold at one point. It's no longer backed by gold. It's backed by force and effect. That's what fiat currency is. I'm not saying fiat currencies are bad if it's done properly. We've seen it done properly. We saw it done properly in America during just before the American Revolution with colonial script. So Benjamin Franklin talked about it. It does work. And then we saw this also during the Civil War. Abraham Lincoln did this. So Guernsey Island right now is doing this. Guernsey Island is part of the Commonwealth system in England. And so it does work. But for the most part, it's been an absolute failure. And so I don't really see why this would be any different. So that's hyperwave theory. Once again, hyperwave theory is, markets go up or stay straight, then they go up, 1, 2, 3, hockey stick, go down is phase 5. Phase 6, it goes up, but it runs out of steam, and then phase 7 is the complete crash, and then they start the system all over again. So that's something to watch out for. And if you're ever interested in, if anyone has any other financial theories out there, let us know. My name is Leslie Michael Jr., and we like talking about life, truth, business, and marketing, and a couple of other things too. So like our channel, subscribe if you're checking us out for the first time, and if you've been around seeing some videos before, thanks for watching. My name is Leslie Michael again, and take it easy. Bye.